Welcome to WealthWise TV, your smart destination for finance, business, and market news. Please subscribe the channel. Dollar eases ahead of Fed rate decision. Euro slips slightly. Date: September 15th, 2025. Key points. The US dollar index is trading slightly higher, marginally, but overall the trend is toward easing ahead of the Federal Reserve's policy meeting. Traders are nearly unanimous, very high probability, in expecting a 25 basis point rate cut by the Federal. A 50 BP cut is seen as unlikely, but remains in the scenario set. Euro to US dollar is slipping slightly, with political uncertainty in France and a recent credit rating downgrade, weighing on the euro. Other currencies like the British pound and Australian dollar are showing modest strength versus the USD, aided by local data and differing central bank expectations. What's behind these moves? Fed meeting looming. As with gold, many moves in forex are anticipating what the Fed will do and how it will communicate forward guidance. Markets are trying to price in not just the cut, but how many more cuts might follow and over what time frame. Inflation and labor market data. Weaker U.S. labor market signs and inflation that hasn't overshot massively are supporting expectations of loosening. If inflation jumps, it could reverse some expectations. External political/economic risk. Things like France's credit rating, general geopolitical tension, U.S./China trade discussions, etc., are adding to currency volatilities. Outlook and risks. If the Fed cuts by 25 BPS and signals more cuts ahead, USD could weaken further, especially versus the euro, yen, and perhaps commodity-linked currencies, AUD, NZD. But if inflation surprises upward, or the Fed is more cautious, hawkish, then dollar strength could bounce back. Political factors, e.g. Fed independence, tariff policy, government spending, are being watched closely. They could introduce surprises.